All right, there we go. Setting things up, moving along. Let's get a link for you guys. Here we go. And that's how we roll around here. Let me just move this over here so I could say hello to you guys. All right, let me just point this here. Good morning, everyone. Good morning, David, Robert, Brian, Wayne, Timothy, Carrie. We got Hilon in here, Ivano, Gary, Penny, David, Robert, CJ, Wardog is in the house. Yay! Big Bang, Jill, Cam, good morning from Albuquerque. You missed a good session yesterday, Cam. Really good session. We got Nina, we got Lucy, we got Robert, Elizabeth. Good morning, everybody. Omar. Look at that, 37 people in less than, 98 people in less than 65 seconds. Karen's in the house. Jody's in the house. Tom. Hey, Tom. Good morning. Thomas is in the house. Ray from Down Under, of all places. Let me share my screen so that we can all be looking and talking about the same thing. All right. All right. Good morning. Yes, the Scott. Thank you again, Cam, for that Scott Stradamus T-shirt. I wore it yesterday during class, during the class we had, the VIP room. It was fantastic. Thank you again. Now, I want to show you guys something interesting. I want to show you guys something that I posted for you yesterday. See if you guys can remember me posting this. Look what I posted for you guys yesterday in the channel. The momentum in the market is overwhelming, and I feel that stocks are getting a bit ahead of themselves in the near term. I'll discuss all this tomorrow. Look at the NASDAQ down 313 points. The Dow's only down 80 points. There's nothing there. But look at that. Now, that's not the only thing I pointed to you guys. I also pointed out something else yesterday. Let's see if I could find it here. Now, I want to ask you guys what this is worth to you right here. I posted this in the pit yesterday at 5:27 p.m. 642 stocks on my 90-day high list. Typically, when that number gets above 450, my radar goes off and the market is a bit overdone to the upside. We're now at 642. That was at 5:27 yesterday. Now, do you guys remember yesterday morning? Good morning, JT. Do you remember when I was showing you this yesterday? Do you guys remember yesterday morning? Does anybody remember yesterday morning? Rochelle, Richard, JT, Jason. There's a lot of earnings today. We'll talk about them in a minute. Jacques, good morning. Azaz, Raj, Zen Master. Do you guys remember me talking about this? How we have to be really, really careful? That was 24 hours ago. That was 24 hours ago. And you guys remember me giving heads up in the pit yesterday during the day? Why I didn't want to take any trades yesterday in the pit? More importantly, 646. And yesterday morning, that number was, no, that was above 370. It was over 370. It was over 500 yesterday during the day. Don't say I didn't tell you. Now, it's one thing talking about it now, right? But it was 370 yesterday, right? And I was saying how once we get over 400, look right here, 370. And I said, once we get over 400, we're in deep doo-doo. And then yesterday in the pit at 12:59 in the morning, this is 12:59 a.m. yesterday, or p.m. yesterday, excuse me. We have over 500 stocks on my scanner making 90-day high. That's telling me stocks are starting to get a little overextended. And that's causing me to pause to the upside. As far as the downside, nothing yet, but I'm looking. That's at 12:59 yesterday. Now, how the hell did I know that the market was going to be down 300 points this morning? I had no idea. But my momentum levels never lie. A stupid, simple tool like this has predicted probably 90 out of 10 pullbacks. Carlos says, you saved me from opening new positions. You're welcome, Carlos. Good morning. So it pays to be here because we were talking about this morning, yesterday morning, okay? All right, so the market's cooling off a little bit. Shouldn't be a big surprise. We have earnings on FANG stocks coming up in about 2 weeks, and these suckers need to rebalance themselves. That's good, Rick. That'll probably serve you better. Good. Excellent. I like to see that. That makes me very, very happy. All right, let me just take a sip of my green tea, and I'll begin. Now, it doesn't mean that there's a lot of bad stuff going on with all the stocks, just the chip stocks right now. We have to be very, very, very careful of. That's info made me money early this morning on the NQ. Nice. Very, 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 very nice. All right, but that was yesterday, right? We got to now move into today and see what happened today. All right, so, let's start off. First things first. We already had Goldman Sachs. We already had BLK. We had all of these earnings are out. We had the large cap financials. They're doing pretty good. Today we have a chip stock. We have Johnson & Johnson. We have financials. We got KMI. We got Las Vegas Sands, and we have airlines. Airlines are very, very insensual, okay? That means if UAL goes down, Delta will go down. They're very connected. Hey Kirk, they're kind of like connected at the hip. And then tomorrow, you got Taiwan Semiconductor and Netflix. All right. Good, Rick. Good. I'm glad you did that. Smart. All right. What about momentum levels? Momentum levels are really healthy, like 76%, 78%. The Russell 3000's at 82%. We've had the biggest inflow into small caps and Dow stocks that we've had since COVID. Okay. Hey, Duzzy, good morning. By the way, before I forget, Customer Service Live, aka the Cam and Gustavo show. I actually like the Cam and Gustavo show better. Don't miss out. 10 a.m. to 1 p.m. today. It's a great time to go there. And by the way, that program that I launched yesterday, Brian, thank you, Brian, once again created some a new scanner yesterday, so we'll have two different A-line scanners. Matt and I are going to be looking at that this morning, and we'll hopefully give it to Cam to put in the members area. But there's another scanner coming your way, Cam, from Brian. So don't miss out. Customer Service Live from 10 a.m. to 1 p.m. Don't miss me today. I'm going to be talking about my favorite short stocks at 1 p.m. I'll be doing my last class today, I believe. It'll be on how to use the accumulation line. A lot of folks have watched it and several times, and they're getting a lot of tidbits from it. I don't suggest you miss it. And if you do, that's on you. Also at noon, I will be in my VIP room where I will be talking about all the afternoon stuff. Moondog is in the house. Yay! All right, so don't miss any of those goodies. But as far as momentum levels, things are looking fairly solid across the board. I'm not going to make a lot out of Rebecca. Good morning. I'm not going to make a lot out of this chip fallback because I still have several chip stocks on my radar this morning that look pretty good. Looking at the commodities market, there's two different things going on right now. There's two different things going on. Energy stocks, if you look at XLE, a lot of these energy stocks are starting to break out. All right. They're starting to break out, and it's trading above the moving averages. The problem with this is the same problem we had before. I'm not seeing enough commitment from the crude oil sector to generate that kind of a buzz. So until we get up to this area, I am not going to be trading energy stocks to the long side. I may trade energy stocks to the short side. Okay. Gold finally made an all-time high. A lot of folks, not a lot of folks, a few folks started emailing me saying it's because of Trump, it's because of the elections. No, it's not because of Trump. It is not because of the elections. Gold is not that sensitive 3 months before the elections or 4 months before the election. The reason the gold market's going up is because Chinese do not want to hold assets in USD. They want to hold assets in gold because they have less trust for the US government. That's one of the biggest reasons why gold has been going up, because China has been buying up gold like there's no tomorrow. Okay. Um, would I be an investor in gold stocks? No, I would wait for a pullback. I would wait for a pullback to this area right here before going long gold. Now that we made a higher high, I'm now interested in gold, but I want to wait for a pullback before buying gold. Yes, Duzzy, that's exactly right. It's because of the Chinese buying. They've been doing a lot of buying in gold, a lot of buying in gold. Matter of fact, I think I posted yesterday something in the Telegram channel telling you guys that. Here it is, right here. A few folks asked me about gold. There's two primary reasons investors are putting money into gold: because they believe interest rates have peaked. So if they believe interest rates are going a little bit lower, there may be more value in upside in the gold market versus interest rates. That's one reason. And the other reason is China. There's two primary reasons for that happening right now. And it has nothing to do with Trump. It has nothing to do with the election in any shape, way, or form. If market was uncertainty, we would see the VIX give us a lot more upside. Speaking of the VIX is definitely in panic mode right now. I'm not blaming it at all, but until we go up to the 15, I wouldn't really make much of it. Once we're past 15, we're going to be starting to get into panic mode, but not yet. Hey, Eagle Beagle, how are you? Yeah, they're holding the Chinese are holding a lot of gold. So this is my key level. I want to see VIX above 15. Once we see VIX above 15, then we get into the panic zone. All right. Dean, I think you have it the other way around. I think the US dollar is it's not gold. It's more of US dollars the lead and gold is the follower. Bond market. Are we finally in a deflationary period? Nope, not yet. The kid is not getting his bike in September as of yet. Also, keep something in mind, guys. The Fed got it wrong 2 years ago. The Fed got egg all over their face 2 years ago. They really made a big mistake. Also, the Fed knows that inflation is very sticky. The last thing the Fed wants to do, unless they know they're all going to be fired, and they don't know that as of yet, the last thing the Fed wants to do is create a problem like we had 2 years ago. This is why Powell keeps saying they're not going to make any decisions ahead of time. Now, is that true? Are they not making any decisions ahead of time? No, I believe maybe 20% of what Powell says. But I do believe that they're going to be very, very flexible. And I believe they're going to wait till the last minute possible. That last minute possible is not September. That last minute possible is probably November, if I had to guess. So they're not in a hurry, and they don't want to make asses out of themselves again. They've already done it before. Okay. It's not good to make an ass out of yourself twice in 4 years on the way to lowering and on the way to hiring. It's not a good idea. So don't believe everything you hear in the media and listen to what Powell's saying. Powell keeps saying, we're going to wait as long as possible. We're not going to be pressured by politics. Now, I don't use politics in my market analysis at all. Zero. It's like I pretend we're still in kings and queens when it comes to the market. And if you look at the market that way, you will see it a lot more clear. Now, am I going to say there's no political pressure? Of course, there's political pressure. But if you start using that in your analysis, you're going to go down a slippery slope that you will never be able to get out of. Okay, because there's enough things in your mind screwing up your trading that you don't need one more. Trust me on this one. Okay. Small caps. Are small caps done? Are they finished? Are they still going up? Well, they're done. They're down this morning. But overall, we need to get above this level right here. Until we get above this level right here, nothing good's going to happen. Let's look at ARK. Let's see if Kathy's stocks are finally starting to gear up. Remember, the crappiest stocks usually rally towards the end of a rallying period. Here's how Kathy's looking. She's still way in this thing. I drew this 2 years ago, and I haven't changed it since. So no, I'm not seeing a broad rally in smaller stocks, because if we did, ARC stocks would start breaking out. So I think this is just a banana in the tailpipe. It's getting the market really, really excited. It's going to cause some short covering. And ultimately, we're not going to make a swing high. I think we're going to come down to this area and break down. Also, I'm not seeing a reason right now for investors to be putting their money into smaller cap stocks, because we could be having a really nasty earnings sweep. So I would be very, very careful right now with what you're seeing here in the small caps. I would also be very careful with what you're seeing in the Dow Jones, because the Dow Jones was up 700 points yesterday. It made a new high, all-time high. The market cap is pretty broad right now. It's down a little bit this morning. We got to be careful at these levels. We are just now getting into earnings season. Let's talk about everything, and then we'll kind of back away and put everything together. By the way, just so you know, today we've got housing starts, very important report that could potentially cause the housing starts to begin to rally. And we have industrial production right before the market opens. This is a pretty important report. Good morning, Robert. Hey, Infinitely, good morning. So don't go, and we got Christopher Walker speaking at the market open, and we have the beige book, and we have bond auctions, and we have petroleum status report. Don't be a hero. Don't try to put on trades. Don't try to pick tops and bottoms. Just wait till you have some clarity on market direction. All right. Concerns over stricter U.S. restrictions on China trade and semiconductor technology weighted on sentiment, while everybody's waiting for corporate news. You guys can let me know if earnings this morning so far have been pretty good or so far have been pretty bad. Seeking leverage with the U.S., with allies, the U.S. considering whether to implement a measure known as Foreign Direct Product Rule, which allows the country to impose control on foreign-made products using even the smallest amount of American technology. The U.S. is presenting this idea to officials in Tokyo and Hague, a scenario that is becoming increasingly probable if these countries do not strengthen their own measures against China. I don't know what reports you're talking about, Thomas. How do we hear these reports live? You can subscribe to a company called Trader Exchange. Trader X. Here, let me give you an email. Trader. They can give you everything in real time. Okay. Bank of America rose. I mentioned that I like Bank of America quite a bit. Match.com fell apart. Actually, no, it didn't fall apart. It got upgraded. Sorry, I made a mistake. They disclosed that there's a stake in the. There may be a buyout on Match.com possibly. Bank of America rose, did really, really well. I'm hoping we'll see more follow through on the banking stocks today. Thomas, yeah, Trader Exchange will have that. On the bearish side, Schwab did not do well. We have not been looking at Schwab lately. We haven't really looked at Schwab for the last couple of months, but we have been looking at Bank of America. One will offset the other, but I'm still liking what I'm seeing on JP Morgan, on Goldman Sachs, so forth and so forth. Retail sales were unchanged. They weren't bad. They were actually better than expected, which is a really good sign. We now have a 6.7% chance that the Fed is going to take action end of this month. We know that is not going to happen. There's a 93% chance they're going to take action in September, according to the bond market. I think this is more like 15%, 10 to 15% that they're going to do that. We got earnings today on Johnson & Johnson. If you guys know if any of them already came out, just put in the chat what they came out with. But we got healthcare. We got PLD, we got banks, we got healthcare, we got airlines, UAL, Ally Financial. So banks, airlines, and healthcare. We got industrial production data coming out very, very soon. We got building permits, as I mentioned. We got crude oil inventories, and we have the beige book. We have a pretty full house today. Oh, hey, Johnson & Johnson beat. Good. Probably get another blue chip rally if I had to guess. Europe is down pretty good, extending losses for the third day. Investors are evaluating those regulations that I just talked about a minute ago. ASML, which is a chip company, plunged after 6%. Chips are not going to do us any favors today. Now, folks, I'm going to say something right now. Please don't send me emails asking me if it's a good time to buy NVIDIA or AMD. If you send me an email like that, I'll know you're a bottom picker. I'll label you as a bottom picker instantly if you do that. Don't do that. Don't do that. I'm not buying any chip stocks. I'm not buying any tech stocks. I'm not bottom picking at all. I'm going to be buying stocks that are making you highs, not stocks that I'm going to try to figure out where they're going to stop going down. So stop sending me emails if it's time to buy NVIDIA. Stop sending me emails if it's time to buy AMD. All right? I'm going to put, you know how they have the no-fly zone list, Eagle? How they have the no travel ban, how they have a ban of people that you ban from travel. I'm going to label you as a bottom picker if you send me an email like that. I'm going to get you a bottom picker t-shirt if you start sending me emails about NVIDIA and AMD. I told you yesterday to stop being in those tech stocks. Right? So Europe is not doing great at all. Everybody's worried. Everybody's up in arms about this new regulation that they may be imposing. Cam, you may have another T-shirt on the that says "No bottom picking." Yes, no catching the knife, no bottom picking, no nutty mishigas. Stop getting crazy about the market. Stay away from trouble. What did I tell you yesterday? Financial stocks, JP Morgan, healthcare. Did you notice me talking about semiconductors? Only a few, the ones that were making all-time highs. Not NVIDIA, not AMD, none of that stuff. Hey, Billy, how are you? Yeah, no catching knife. China. Aluminum and oil stocks led the decline while property stocks outperformed. IMF upgraded its forecast, which is really, really great. GDP projection is still in the crapper, although it's higher than April. But so things are just not doing that great in China. Japan reversed earlier gains, closed lower. Losses in chip stocks, offset gains in defensive and machinery stocks. If I was a betting man, I would bet that industrial and financial stocks and maybe even healthcare would still rally today at the expense of tech. For what is up in the down market, that's right, Penny. That's right. Don't be a bottom picker, Zen Master. I was about to talk about 5. By the way, Steve, where do we mention 5, by the way? Was it on our list yesterday morning? Let's see. It 1, 2, 3, 4. It was our 5th stock yesterday morning. 5, FIVE, down 15% this morning. It was on our short list. All right. So Nikkei, they're not doing as well. Everybody's up in arms about this chip-related slump. Business sentiment among large Japanese manufacturing improved to a 7-month high, according to Reuters. That's really, really good. All right. All right. Anything else I want to talk about? Yes, 5. See, I didn't forget about it. It's on my list right here too. 14% in pre-market after the discount retailer cut its guidance. Now, folks, I'm going to tell you the most important thing you're going to learn today. Joey, I wrote the day before yesterday on Monday that Trump administration and the Republican National Convention will not have any impact on the market whatsoever. I wrote that in my Telegram channel yesterday morning and the day before. Gus, what Trump says right now means absolutely nothing. Please stop that. The reason it's down is because of this regulation. Please stop trying to bring a civilian into the equation. Don't do that. I don't care what Trump said. I don't care what Biden said. I care about regulations. Regulations. I don't know if you guys know this or not, but the president is the executive branch of the government. They don't pass law. There's a legislative branch of the government. You see, something that maybe the presidents are too old to understand. That's what we're worried about right now. You're giving people way too much credit, Gus. Way too much credit and too much importance. All right. So yeah, let's stick to things we know. Let's not stick to things we have no idea about. Trump says a lot of things, and so does Biden. It doesn't mean anything. All right. Okay, so that's what we know here. I'm trying to focus you guys on what really is driving the market. And I'm telling you right now, Trump and Biden are not driving this market right now. China is what's driving this market. This regulation in China is driving this market. All right. All right. We talked about the bond market being a little bit lower today. We talked about volatility potentially spiking. We talked about the real reason gold is going up, and it has nothing to do with the uncertainty over the presidential election. That's ridiculous. And the Dow is only down 0.28 after moving yesterday up 730 points. So the Dow has barely moved down. Now, what about key levels in the market? Let's talk about that. Ooh, look at where we're at right now. How does this impact our key levels? Look at this. Right here, right here. All right, we're all the way here. Let me just show you guys something. The level we have to be careful of. I'm going to tell you guys something right now. The level we have to be careful of in the SPY is right here. Is right here. Here you have a lot of consolidation. Till we get here, see, notice this was mostly an upwards momentum run. So don't be surprised if we come down all the way. This is why I have the green line right here. This is kind of like my safety zone right here. And that level is at 548.70. Okay. Be careful here. Be careful. Now, a lot of folks are going to say, oh, we opened down. We're going to have a gap down today. A lot of folks are going to say, okay, we have a gap down. We're going to fill that gap. Maybe, maybe not. But if we are going to be filling that gap, are you going to be looking at stocks that are down 5 points, or are you going to be looking at stocks that are up $2? I'm going to be looking at stocks that are up $2 on this gap, because when this gap fills, those stocks will be up $4. But the stock that's down $5 may drop another $5, you see? So don't try to bottom pick today. Look only for the strongest stocks. Look for stocks making daily highs. Stocks that are above yesterday's high. If a stock is not above yesterday's high at the open, forget about it. Okay? It's very easy to pick strong stocks when the market is doing what it's doing today. It's almost, they're almost served to you on a silver platter. Why? Because all I have to do is look for stocks that are breaking out from this level, and I have my hot list. But when the market gaps up, it's very hard to do that. Okay. Let's see. Another service gave a buy in about 3:30 yesterday. Looked at daily chart. Did my and thought to myself, no way, you're the only guru people should listen to. Oh, thank you. I appreciate that, Penny. That's so nice of you. You're such a nice lady. Thank you. Maybe one day you can take me. Maybe one day you can take me on a helicopter ride. Penny puts her own helicopters together, folks. No joke. She puts her own helicopters together. Hey, Penny, if you send me another picture, I'll post it in the Telegram channel so everybody could see. How about that? Would that be cool? I think that would be cool. So anyways, folks, be careful here. Please, please be careful. Don't feel today like you have to buy something or you're going to be late to the party. There's a really good chance these semiconductors can drop some more and give us some more downside. Please be careful. Let them bottom out. What I'm hoping for, let me tell you what I'm hoping for. And I'm using the word hope. I'm hoping for that market money will come from the chip stocks into other areas of the market like we've seen the last several days. What I'm hoping will not happen is money coming out of the market. If the money comes out of the market, then we have to watch the bond market very carefully, and we have to watch the gold market really carefully. As of right now, we're seeing sector rotation. We're seeing money going from tech stocks into other sectors, but you may start seeing money coming out of the market. That has not happened yet. All the money has been going from the tech stocks into small caps and blue chips ahead of earnings. But if we start seeing bad data overall, money will start leaving the market and going into flight to quality, which is bonds and gold and volatility. We haven't seen that yet, which means you don't need to bottom pick. All you need to do is keep buying stocks that are moving higher. Financials, healthcare, and I'll talk about all of that in just a few minutes, okay? I'll talk about sectors in just a minute. So let me just go through the levels. I got to tell you, today's session is very important. Now, every session we do here in the morning is very important, but today's session is very, very important because we're breaking key levels. Look at the NASDAQ pre-market. We gained yesterday 0.4%. We're already down 1.35%, and look at the level. Now, remember this level I showed you on the SPY? I want to show you guys something. Thank you, Jody. I appreciate it. Remember I told you how the SPY has to get to this level right here? Remember something. The SPY has 50% healthcare, consumer staples, financial. So it's much harder for the SPY to go down than the QQQ. That's why you're seeing the SPY here in comparison to where the consolidation and the congestion is. But on the QQQ, that's a good number, Jody. But on the QQQ, look how much closer we are to that level. We're almost at that level. Let me just extend this line here. Look how many levels we broke. 1, 2, 3, 4. We're below that level right now on the QQQ. Please, don't be a bottom picker right now. Please don't. If we break through this level right here, which is at 485, we're going to consolidate. There's a lot of strength right here. Look, a lot of strength. A lot. So there's a good chance we can get stuck at this level on the QQQ, and that level's at 486 to 478. Okay. On the Dow Jones, let's do that level on the Dow too. We don't want to discriminate. I got my fan here. I used to be in a rush to get out of here because it was getting so hot in the morning. Now I have my fan. It's keeping me so cool. I'm in a great mood. I can go all day here. Yes, thank you for that, Herf, 2 aces, and Jody. Thank you for that. We'll look at the bond market in a minute. So far, nothing really here. What about futures? A little bit better, but worse on the Dow. See, my concern is I want to see 100 on the Dow is very little. 295 on the QQQ is quite a bit. I'll do IWM in a second. I'm not in a rush. I've only been talking for 32 minutes, and we already have 345 people in here. So let's continue. So you see the difference of how much stronger the SPY is, right? The SPY only backed away from here because it has more blue chips. Now look at QQQ, and we'll talk about the Dow. I just want to give you a perspective of where we are if we're on the lower quadrant or we're in the upper quadrant. So the SPY is like right here. The QQQ is all the way here. Now let's look at the Dow. The Dow should barely be phased by this. And it is. Look at where the Dow is. Do you guys understand one of the reasons why I picked the stock that I picked for the A-line program? Please don't bring up the name of that stock. But I know a lot of you are in the A-line. Do you guys understand why I didn't pick NVIDIA, why I didn't pick AMD, why I picked the stock that I picked? When you think about blue chip stocks, what stock do you think about? You don't have to bring up the name here. You don't have to say it. But I'm sure you're saying, yep, he sure as hell picked the right stock for right now, right? Look at the QQQ. Look at the QQQ. Look at where we're at. Right? Look at that. And look at the Dow. So I can't say for sure that this is a broad market sell-off. As far as I'm concerned, we're still seeing a sector rotation and not a broad market sell-off. For the broad market sell-off, we have to see the Dow sell off, and the Dow's down only 0.27%. Let me look at the perspective. We went up 700 points yesterday. We're down only 100. So this is not even, this is nothing. This is nothing. And I'm hoping we'll continue seeing outpour from tech into these type of stocks. Okay, Russell 2000. Let's look at the Russell 2000. By the way, I'm still very skeptical about the Russell 2000. Let me explain to you why. A lot of interest rate sensitivity, a lot of technology. So if interest rates don't pan out in September, you could see us completely undo a lot of this. So why am I really, really not talking a lot about the Russell 2000? Look at what the Russell 2000 has been doing. Look at the last month. For this thing to balance out, here. For this thing to, so I'll give you some levels, okay? 218, 215, and then if this is kind of like this is that consolidation level that I was talking about in the SPY, where if it gets there, there's a good chance it'll stay there. This is all right here, panic buying. This is not sustainable over time. This is sustainable over time. So just to give you some perspective, again, I keep showing the same thing just to show you the difference between them. Today's a really good day to do what we're doing right now, by the way. Like if there's a day to analyze the market, this is the day. So you see this level right here, this consolidation right here. You see this consolidation right here in the QQQ, and then I'm kind of going back and forth. See this? See where we're at right here, that consolidation in the QQQ that we're actually getting very close to? Well, for the Russell 2000, that consolidation is all the way down here. All the way down here. So you got quite a while to go. I don't follow the Russell 2000 just yet because I don't think we're where we need to be. I want to see the Russell 2000 break above the all-time high and then consolidate and then start mirroring the S&P 500, and we're not seeing that yet. So to me, this is short covering and just aggressive buying out of tech, bringing this on. I would be very, very cautious. I would be very, very cautious with Russell 2000. Now, what do I mean that from a practical perspective? I'll explain. There are some Russell stocks that I really like that have been moving up for the last several months, very, very gradually. If that's the kind of stock you're looking at, then the odds are it's not being impacted by what's happening in the Russell right now. Let me give you a good example of that. Our Cirrus Logic, that chip stock, Cirrus Logic, it's been going up nonstop. Now, I'm not, again, I know I'm kind of using chips as an example, but that stock is not really was up till now not dependent on the Russell doing this. It was kind of doing its own thing. So if you're looking at stocks in the Russell that have been going up before this started and they're doing this, that's okay. Those stocks are okay. But if you're looking at a stock that just now started going up and you like it because the Russell's going up, red flag, red flag, red flag. Dave is asking about RSP. I did mention briefly that momentum levels across the board, including the Russell 3000, are really, really good. The Russell 3000 is a broad market index. This mimics more of the RSP. And if you look at RSP, you will see that the RSP, hold on, we'll look at that in a second. You will see that the RSP is doing really, really great because most of those FANG stocks are top 100 NASDAQ stocks. So we're only down 0.41 here. Whereas the SPY is down 0.89. The RSP, thank God, gives equal weight to stocks like NVIDIA and Johnson & Johnson, whereas the large one does not. So I'm expecting a lot less downside from the broad market. One spread that I'm considering doing is buying the RSP and buying the SPY in hope of the RSP outperforming the SPY. Okay, so just FYI. Now, what about equal weighted NASDAQ? Let's look at that. Let's see how that's impacted, right? It's not even open right now, but look at how it's been trading the last several days. This is equal weighted NASDAQ, equal weighted NASDAQ. Whereas the QQQ right now is all the way down here. Now, remember what I said. This is a daily chart on the QQQ, very strong support level right here. So this is kind of what I was trying to show you. This. See this right here? That's intraday. This is an hourly chart. Now, this is a daily chart. It's this area right here. A void. We're coming to the void. Voids work to the upside and downside. When you look to the left, there's a lot of stuff here. We can end up consolidating here, and we're not that far away from this area, okay? Just letting you know. Lynn, I haven't talked about individual stocks yet. Give me a minute. So now let's look at sectors. Now, after what we just did right now, you should already have a really good sense of the big picture, and also the medium picture, because we kind of went inside the S&P 500, the Russell. I pointed everything out to you. I gave you all that stuff. But now, what about the actual market itself? Now we're going deep in. Now we're opening up the hood, and now we're looking at the cylinders. Now we're probing. Now we're testing the car's smog. Now we're seeing if the wheel alignment is there. All we've done is just walked around the car, kicked the tires, talked to the owner. We did all that, but what about like going inside right now? Edward says, "Good morning, Edward. How are you? Great session we're having today, guys. By the way, great session. I'm really energized about this. You could tell I'm very excited about today's session. So let's look at sectors. Let's see what we can come up with. This should give you a really good sense of what's going on with the market. Yeah, futures, that's kind of what we're talking about. NVIDIA falling down and all that. So let's look at sectors. Let's see what the last 5 days has been bringing us. Home builders. Let's look at XHB right now. XHB, let's see. Down 83. Down a little bit today, but not all that much. And I told you guys, be careful with all stocks right now, because if the equal weighted, look, if the Dow Jones right now, this looks just like the Dow. If the Dow takes a dump, the home builders will too. They are very blue chip stocks. Now, do I know if that's going to happen? No, and I'm going to be watching them carefully, but this is not good. This is not good right here. 0.83 down. And this right here, too much too fast. Way too much too fast. This needs to be consolidated. This is why I'm very nervous about the Russell 2000, by the way. Too much too fast. Way too much. Way too fast. And this is just panic buying right here. This is where the value is right here. Needs to come back to this area. Okay. This is like imagine the houses in your subdivision have been $300,000, okay, for 2 years. And all of a sudden 10 buyers come in and they raise the price to 400,000, and then nobody buys afterwards. Well, you know what will happen, right? Over the next couple of weeks, the price value will go back to 300,000. I'm using just a random example, okay? That's right, Eagle Beagle. I hope you don't take offense to me calling you Eagle Beagle, Adam. It's funny. I like that term, Eagle Beagle. Okay, so sectors, blue chips, home builders, retail, Russell 2000. Bitcoin is on its own little island. And by the way, isn't it interesting how Bitcoin is not being correlated to technology right now? That's really good. That means a lot of folks are treating Bitcoin as a diversified asset that's not connected to the tech sector. That's very positive, because this can give us potentially a completely other asset to trade that doesn't have a lot of correlation to the broad market. Think Russell 2000. Think, I don't know, what's a good example? Emerging markets. Think about a totally unrelated asset. So this is something we just like ignore this. Pretend it's like in its own little world. But mid caps, retail, home builders, industrial, real estate, interest rates. What's been selling off? Hey, look at this. QQQ, technology, semiconductor, communication. Look how they're all in line with each other too, except for consumer discretionary. And the reason consumer discretionary is not in line is because you have a lot of retail and a lot of B stocks in consumer discretionary. By the way, that's one of the reasons why I'm not so hard on Amazon right now, because Amazon has a lot of consumer discretionary. And if interest rates go down, well, I can assure you that about 50% of retail comes from Amazon. You're right, Penny. You're right. You're absolutely right. Okay, so now we kind of see where everything is. You could see what's the market is favoring right now. It's very clear. There's no mixing things up. You've got interest rate sensitivity, then you got the overall blue chip sector, and then you have technology. And that's how you should be looking at the market today. You should be looking at strength coming into home builders and retail and Russell 2000. I have the Russell 2000 on my 5-minute chart in the Pro Trader dashboard, which I have not had in a long time. I am now looking at it for making new intraday highs, because when I'm seeing the Russell 2000 make intraday highs, I know that there's a certain amount of market cap coming into home builders, retailers, and you don't have to have both mid caps and Russell 2000. They're both pretty much in the same area. Hey, Rochelle, good to see you here. Wow, we got almost 300, we got almost 400 people in the middle of summer in July here. Before I continue, I am going to be talking about my favorite short stocks that are meeting the A-line today. The A-line trade was up about 10% as of yesterday. I don't know about today, maybe even higher. And join me in my VIP room, where I will be talking more about and giving you an update on the second part of the day. And don't forget, Customer Service Live, aka the Cam and Gustavo Show. I love that. The Cam and Gustavo Show from 10 to 1 p.m. Matt and I are going to do a special appearance either this Friday or next week. I want to go up there. All right. All right. Let's yeah, you guys should read that book. It's a great book, by the way. Irrational. There's a book. I forgot the name. There's an old book that talks about the tulips and all that stuff. If you guys can remember the name of that book, if not, I'll post it in Telegram channel later today. It's a classic. It was written in like the 50s or 60s. Something about irrational exuberance, tulips. I'll maybe I have a PDF. If I can find a PDF, I'll post it for you guys. All right, let's talk about stocks, right? We're finally here. Now, look, it took us 47 minutes just to get to the stocks. Let's see, volatility. Yeah, spiking. Let's see how the bond, not much has changed here. I'm just getting myself a little market update, guys. I don't think it's called Tulip Mania. It's not called Tulip Mania. There's a name. It's a very extravagant name of a book that was written a long time ago. I'm going to post it for you guys. I will. Something with crowds, exuberant crowd. It's an old book. I'll post it for you guys in Telegram, or maybe I'll post it for you guys in the VIP room today at noon. So, and also, don't be fearful if you see the Dow down 100 points, but it was up 730 yesterday. And look, a little tip for you. When you see a big bar like this, you want to see the bar defend 40% upside. If the bar moves more than 40% down below, that means the rally will probably fade. If you see us defend 40%, in other words, we went up 700 points yesterday. I'm going to give the market the ability to go down 300 points today. But if it goes down below 350, that means we're already at 50%. That's not good. We want to preserve 40% of the rally. Madness of the crowds. That's it. Madness of the crowds. JT got it right. It's called Madness of the Crowds. Something Madness of the Crowds. All right. So right here, when you see a big day like this, see a big down day, look at where it stopped going up, like at 20% right here. Rule of thumb, when you see a big up day or a big down day, you want to preserve you want to preserve 40% to the upside or downside. In other words, you don't want to go into the 60th percentile. You want to stay in the 40th percentile. The higher it pulls back. So if it stays right here and pulls up, we're good. This is like 25th percentile. But if it starts coming down here and getting into the 50th percentile, be careful. Yeah, what JT just said. So right here, 40th percent. Whenever you see a run day, a big, see, I just taught you something you guys didn't know before. When you see a big run day like this, a big run day like this, a big run day like this, you want to preserve 40% of the upside. If it moves back more than 40%, the party's over. That's it right there, Eagle. Extraordinary, Popular Delusions and Madness of the Crowds. That's the name of the book. I'll see if I could find you. That's why I couldn't remember it. It was very, but that's the full name. Extraordinary, Popular Delusions and Madness of Crowds. Very old book. Can you guys see when it was first published? Please, please. All right, let's talk about stocks. Now, Roger, why are you giving us chip stocks if you're telling us chips are so bad? Because I'm seeing some chip stocks that are doing pretty damn good. And if we continue seeing that, we may have a reversal, okay? 1841. Thank you, guys. Thank you, thank you, thank you. I said it's an old book, right? But that is the name. That is the name. Eagle, Jim, and Jill got it right. Let's do the short side first, okay? Very excited. Very, very excited today. I'm very excited. Estee Lauder. Now, if the stock is breaking down right now, there must be a good reason for it. Yeah, it was republished, yes. Nike. I gave you guys the stock yesterday morning. I gave you guys this stock yesterday on the hit list in the VIP room. I was pretending that I didn't have anything good for you. And then I said, oh, let me pull this one out. I also told you that wait for it to close below the 200-day moving average. This was the last short stock I gave you in the VIP room yesterday at right before 1 o'clock. The stock is down almost $9 this morning. Does anybody not remember me giving you this in the VIP room as my last trade yesterday and told you to wait till the end of the day to make sure it's trading below the moving averages? Is anybody going to tell me that I'm crazy or I'm making this up? It's still a good short. And yes, I gave it to you yesterday for free in the VIP room at noon. Maybe that'll cause you to go into the VIP room more often. My first day back to the gym was fantastic. I told Lauren, my trainer, to go light on me, but she didn't go that light, and I was able to do most of my weight. I lost a few pounds. I'm trying to get it back, but I did pretty good. Thank you for asking, JT. So, and this is below the VWAP. Meta. I gave you this yesterday. It was my last short yesterday before we went to the long side. You can't argue with me because it's all recorded. Micron. Micron. Yeah, it was posted. Meta short. Yeah. Micron breaking down. Be careful. We got the 100-day here, but we're breaking down on Micron. There's some support right here at about 112, but we still have about 10 points to get there. EQT. One of the 9 stocks we took a loss on in the pit back in the day. I think this is a natural gas stock breaking down. Be careful, but it is breaking down. I did. Oh, you shorted Meta right after you gave it to us and talked about the 200. There you go. I bet you're happy that you were in the VIP room yesterday. All right. Raymond James Financial. Now, interestingly, most financial companies are doing well right now, right? Look at Raymond James, and it's below the 200-day moving average. I am definitely going to be looking at this stock today. When all the stocks are going up in an industry and the industry is being aggressively bought, and you see a stock breaking the 200-day moving average, you know institutions are selling that stock. What's our game plan? To find stock institutions are buying or selling. I could promise you, I can guarantee you, institutions were selling the stock yesterday. I would bet my dog's life on it, okay? Institutions were selling the stock yesterday aggressively. So what do we want to see today? We want to see a breakdown below, right here, below 113, okay? All right, let's do the long side. I also told you last week that you should start looking at healthcare stocks, and I also said that includes large cap biotechs. I said small cap biotechs you don't want to include in that. Oh, my dogs are going crazy right now. Thank God you guys can't hear it. But I also told you that you should start looking at large cap biotechs, because large cap biotechs like Amgen are, and look at the biotech ETF. Not bad, right? I talked energy. I did talk energy today. My view on energy has not changed. I said till energy gets to this red line, I'm not going to be buying any energy stocks because there's a divergence between the crude oil and XLE, which is the energy ETF. Wow, it's almost 9 o'clock. I got to get out of here soon. I got to go to work. See that? I'm not buying this yet till we're above this line. That's all I said about energy. All right, let's continue. Let's talk about stocks that I'm liking right now. I like Train Technologies. I like this stock. It's the first time we're ever talking about this stock. We've never, ever talked about this stock before. Got to have a little humor here, right? We've never talked about this stock before. Um, Smart Sheets, Procter Gamble. Excuse me, Philip Morris, not Procter Gamble, Philip Morris. There is a correlation between tobacco stocks and gold. Philip Morris looks pretty good. And by the way, investors tend to buy cigarette stocks, alcohol stocks when markets are turning down, like when technology's down huge. Just making a point here. MGM, even though China's not doing well, I don't know what's going on with this stock, but it's bucking the trend pretty damn well. Be careful. We got some resistance right here, but you still have a little bit more upside to go. You're welcome, PI007. And now, APH, a few more. Beautiful stock. Right at the 8-day EMA, by the way. Right at the 8-day EMA. That's something Uncle Roger makes a note of right there. Yeah, those dogs are, I can hear them really, they give me a headache. All right, now, Citibank. I still like Citibank. I still like Morgan Stanley. I still like JP Morgan. Now, these are controversial, okay? Be careful with these. Be careful with these. On semiconductor, breaking the 200 to the upside, looking really, really good here. Texas Instrument, also looking really, really good here. Please, please, please be careful. Be careful. And I'm going to say again, be careful. That's right, Helicopter Gal. Good, Desi. Good. All right. That is all I have for today. I'm going to have a class when I'm going to be giving you two short stocks today in my 1 o'clock class. And then I'm going to be giving you a whole lot of stocks in my VIP room. If you haven't seen my show on the A line, Don't miss out. It's happening at 1 p.m. Eastern time. If you have any questions that I did not answer, you can send me an email, roger@rogerscott.com. Feel free to email me. I'll talk to you later. Please don't bottom pick today. Let the market show its hand. Don't be in a rush to trade today, okay? I'm going to be very, very cautious today. Very, very cautious for the right reason, okay? I'm very glad that I did not put on a trade yesterday and just took profit on in the pit on an overnight stock on Google and closed it out. Don't be a hero. This is not a time to be a hero. Hey, Tony the Tiger. Bye, guys. Have a great day. Love you all. Thank you for being here. Almost 400 people today in the dead of summer. Bye.